Hello, good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain. With me is Vinny Motiwala. And if you look at the markets right now, holding up in the green, yes, we're off the highest point of the trading session. 19,800 is something that we have given up on an intraday basis, but not too much to complain about. We still are 100 points higher than where we started off the day with. So decent momentum. Having said that, the bank Nifty is a bit sluggish and underperforming the frontline index, and so is the broader markets as well. It's Reliance, which is the heavyweight, which is contributing quite a bit. So that stock is high by 1.5%. And surprisingly today, HDFC Bank is also doing all right. It's up around 0.7%. But if you look at the contribution coming in, that's your top performing, the second best performer as well. Metals, they continue to gain traction. So whether it's a Hindustan Copper, Hindustan Zinc, Adani Enterprises, Welspun Corp, they're all high in the trading session, and they've partly got fillip from the fact that dollar index is currently trading at a 2-month low. Real estate, that continues its move, and 15-year high already on that index, and individual counters making fresh record highs as well. So today is the day of Sunteck Realty, for instance, doing quite well. Oberoi Realty is powering ahead. We'll discuss more of those stocks in detail as well. And Pharma also is in a bit of a flavor, so we're watching out for that. Having said that, it is FMCG which continues to be on the back foot, and PSU banking space too is seeing a bit of profit booking. So some of these sectors coming under pressure, but apart from that, not too much to be worried about, Vinny. And overall, the market breadth is still positive, and individual names still doing quite well.
Absolutely, individual names are doing quite well, and some of those individual names, let's talk about that. Now, this one, KPIT Tech, this has been doing well for the longest period of time. As of now, when you look at KPIT Tech, it's down and out in trade. It's already seen a very strong run-up in the month of November. The last 1 month, when you look at it, it's also seen a very strong run-up of around 36% in a month. Now, we have a brokerage note that's come in from Kotak, where they are giving a sell rating, given a target price of 940 rupees per share, considerably lower than the current target price that we're seeing. Valuations, that's quite expensive as well. Then in terms of the guidance also that they had upgraded in Q2 as well, so that is something that they are not very sure whether that is actually achievable as well. And before, fundamentally, there were not many catalysts that were coming out for KPIT Tech, so that is a factor that is coming into play. Current market price is implying a 20% dollar revenue CAGR growth over the next 10 years is the highlight that is coming in from KPIT Tech from Kotak. Now, let's keep an eye out on that one. But realty space, we have two names, that is Sunteck Realty as well as Oberoi Realty. Both of them are holding on to good gains today. When you look at Sunteck Realty also, this one is on the back of a brokerage note from Motilal Oswal, initiating buy and target price of 640 rupees per share. Offering in the luxury location with low risk approach is something that's a positive for Sunteck Realty. Healthy balance sheet is what they have. Robust cash flows is something that is there for the company, and multiple growth levers that will play out for the company is what Motilal Oswal believes, and that is why that buy rating is what they're keeping for Sunteck Realty. Oberoi Realty, second consecutive day of gain that we've seen coming in for Oberoi Realty as well. Obviously, couple of news flows yesterday was in terms of the NCR foray. Today, there is because Thane luxury project that they are starting as well. So that is keeping Oberoi Realty a buzz as well. And overall, the Nifty Realty also, Anisha, that's been in focus for a while, has been trending in the last couple of months as well, in terms of obviously gainers coming in from that front as well. And look at it today also, holding on to good gains among the top sectorial gainer as well.
Oh, well, yes, momentum continues to build up for the real estate sector, and there's no stopping the rally that we are seeing there. But the big question is, of course, where do we go from here on? To discuss that, Kunal Bojra, Nuresh Mirani join us on the technicals, and Rahul Shah joins us to talk to us about the fundamentals of the market. Kunal, your view, 44,000 eludes when it comes to the mark of Bank Nifty, and the Nifty too not very comfortable about 19,800 mark, seeing a bit of sell-on rally type of momentum as well.
Good afternoon, Anisha. So I think it's a natural reaction for the indices, because at one point of time, one of the major sectors, which is banking index as well as financials to a larger extent, they're underperforming. So to find that right sector balance, to try and have other sectors as well as other stocks from the Nifty 50 trying to offset the potential losses or from the weakness in the financials and the banking, I think it will take a lot of time for the markets to get into a settling phase. But on the other hand, what we are also looking out for is that every time when the index goes into those narrow phases of 2 days, 3 days of consolidation, it actually results into the index giving a breakout of sorts. Like for example, in the last 3 days, we retraced some 200 points to 50 points on the Nifty, and I think we've managed to just recuperate major part of the losses from that 19,875 mark to 19,600, which we made a low a couple of days back. So I think in that aspect, the trend for the index is still on the bullish side. But yes, in terms of the market mix, because of the lack of momentum from financials, banking names, as well as few of the other large cap stocks, the move looks to be a bit more somber than what it actually, or what generally plays out when you see an index breaking out.
Right, Naresh, let me bring in your view, because today what is happening is a bit of a different story than we normally see in terms of the market is that, the mid and small cap is not outperforming. It was not the outperformer versus the benchmark indices. What is that trend that you would say in terms of the broader markets versus the benchmark indices? Is that something that we could expect as a trend in terms of benchmark versus broader markets now?
So today is a day when the mid cap and the small cap indices are flat, and we are seeing a 100-point uptick on the Nifty. Now, for the last few weeks, we were seeing the mid caps and the small caps outperform. So that is a welcome change, wherein finally we are seeing some heavyweights make a move. For example, Reliance Industries has hit almost a 1 to 2 month high. That is the first time it has done so in terms of the last few sessions. So relative outperformance and taking leadership. If this continues, this could go towards 2,500 and help the Nifty go up. So overall, the view is positive on some of the heavyweights. We are seeing some bit of, say, outperformance coming in. We could see some follow-up over the next couple of sessions at least. So positive on large caps to do a little bit of a move over the next few sessions, specifically Reliance Industries to take lead.
Okay, so that's the take coming in as far as the index is concerned. But Rahul, let's get your view regarding the insurance space. It's been seeing quite a bit of positive momentum for the last 4 to 5 trading session. Today, SBI Life, HDFC Life is doing well. Even the general insurers like New India Assurance are perking up as we speak. Is there something to look at positively in this sector, or there are better opportunities available and maybe not the best time to look at the life insurance or general insurance plays?
Hi, good afternoon. So I think obviously, if you ask me in terms of vis-a-vis other opportunities, then yes, I think other opportunities in terms of returns could be much better, maybe in financials as well. So I think banks offered a lot of value right now in terms of the valuations and the quarterly performance and what we saw post numbers also, as well as the commentary from the management was pretty strong. So I think that space, I think financials and predominantly private and public sector banks remains should be a focus from current levels. Well, I think insurance companies, I think obviously the stocks, some of them have moved up in last 3-4 days, but I don't think so. I think major thing to look at in near term anything is happening. So as a part of an allocation, yes, I think general as well as life has to be part of your portfolio, something like Star Health or something like ICICI or maybe something like SBI Life. So I think part of the portfolio has to be there, but I think the major focus, if an opportunity is what I feel is, I think the banks must be in a focus from current levels.
Right. Rahul, I want to talk about, what I was talking about in terms of the Realty play, right? Realty, when you look at it as an overall Nifty Realty, obviously strong gains we've seen, but a lot of these individual stocks also, we have seen a lot of, in terms of expansions or strategy-wise, like foray into different areas as well, and premiumization, luxury trend, that's been working out for them as well. So anything that, you are finding quite exciting in the Realty space, do you think that, this is something that will further lead to a better fundamental side for the Realty players and Realty companies?
So I think overall real estate as a sector, if we look at it in last year and a half, I think every quarter when the number comes up and the management gives up the guidance strongly and they have delivered. So last 2 to 3 quarters, we've seen all-time high sales reported by a lot of companies in their quarterly performance. So again, when we look at it, I think most of them in near term, I think if we look at this quarter numbers as well, I think be it Oberoi's, be it Prestige, be it your Suntech, or maybe be anything like DLF or so on and on. So I think entire sector, if you look at it, so I think a lot of stocks are at multi-year highs. And maybe I was just looking at today, I think a lot of stocks like DLF or Prestige and all. So all of them are at 15, 16 years high. So my sense is, I think the sector has got into the new trajectory. The numbers is talking about it. And I think way the things are, I think looks like, I think still the entire real estate sector will continue to do well from here.
Place when it comes to the construction and the real estate sector, but in the last few minutes there is a spike on the likes of CESC. SJVN is trending higher. NHPC is one stock which is coming on the radar. Indian Energy Exchange is also perking up. Naresh, any merit in buying into any of these names?
So the whole power pack looks interesting. NHPC is the most interesting one because that's been a stock which has not really outperformed the way we've seen SJVN, etc. So NHPC at 54 odd levels looks promising to for a move towards 60-65 with the short term. And then you have CSE, which I continue to like. The stock has broken out of a multi-year price movement. So the stock used to be 9,500 back in 2018. So it's a good breakout here, good price action and volume. So like CSE and NHPC at current levels.
Okay, that's the view coming in on CSE and NHPC. But, Kunal, an interesting play that is coming out is now Nykaa. While other companies, whether you look at a Zomato or a Paytm, that actually surely did see a run-up before that. But Nykaa, is that on the charts now something that is a time or a story for a run-up for Nykaa?
Well, it seems like, because what actually started off with probably a false move for Nykaa. I'll call it a false move because there was a point, when the stock I think bottomed out at 118 or 120 mark. From there on, there was a false move for Nykaa where the stock had come back above the 200 moving average. That was I think around 145, 148 mark for the stock price. But from there, the stock had fallen down very sharply back again, had come back to 120, 130 odd mark for Nykaa. So that was the point where the stock was still not confirming a breakout for itself, even though it had traded above the 200 moving average for a few trading sessions. But this time around, after the second retest of the stock towards the long-term averages, I think the chart structures have changed significantly for the stock. So not just breaking past above the psychological 150 as well as the 200 DMA, the influx of volumes which have happened for the stock, even that's very positive. So I think we are definitely seeing a change of structure over here. So this 145, 150 mark, which is the previous breakout point, that should act as a major support. And keeping that as a stop loss or a support range, I think traders could still look at a buy and on current levels as well as on dips.
Okay, buy at current levels as well as on dips. A positive commentary coming in there for Nykaa as well. But earlier we also spoke to Venugopal Gare, Managing Director at Bernstein as well. And he has his views. He has some of the new age tech companies in his portfolio as well. So what was the strategy behind his investment? What does he look at? Let's listen into that and then slip into a short break.
Broader thinking primarily was more centered around business models where we potentially felt that the competitive risks are relatively lower. So that was one broad thinking. So if I look at all the three consumer tech companies that we have, they are primarily dominant players in their respective end markets. And I don't really see them being in a situation where competitive risks are going to be intense. So that's the way the selection was essentially done. So two of them, which basically one of this e-commerce logistics company and the other is a food delivery company, of course, were introduced much earlier. Paytm was more a recent introduction because the coverage came in more recently, but it's the same situation there. But broadly, overall, consumer tech as a space, we went overweight in January of this year, which was our way to play IT overweight. Right? So that's the way we had sort of squeezed out of their IT services, positions. But that's something we are going to actively be relooking at as to whether to tilt that position a bit more favored towards IT services, for next year.
Watching closing trades on ET now, and yes, market's nothing exciting as of now as well. At the similar levels below that 19,800 mark, but trading with a gain of almost 0.4% as of now as well. But what's exciting is the action that is going to be happening in the IPO market this week. And just the first one that has opened up for subscription today is IREDA. That is open for subscription. Let's go across to Vamakshi to get in more details on the subscription. How is that looking like? And to talk more about the IPO as well. Vamakshi?
Well, yes, IREDA is expected to raise around 2,150 odd crores with its IPO that has hit D Street today in itself, and the company plans to raise nearly 1,290 odd crores from a fresh issue which will in turn be used to improve the company's capital adequacy ratio. The remainder is via OF, offer for sale, and with this the company's shareholding structure will undergo a change. Government currently owns nearly 100%, and this in turn will decline to almost 75% post the company's listing. Now keep in mind that this is a mini Ratna government enterprise, but it is administratively controlled by the Ministry of New and Renewable Energy. The company extends financial assistance for renewable energy projects and energy efficiency and conservation projects. The company has a loan book of almost 47,500 odd crores, which it has managed to grow from FY21 to FY23 at a CAGR of almost 30%. Not just that, the company has managed to post a very strong growth in the net interest income, growing by almost 16% CAGR, while the net profit has grown at a CAGR of almost 58% over the same period. Yes, the spreads and NIMs have come under pressure, and that was mainly on account of the yields coming under a bit of pressure over the last few years. But the operational efficiency of the company has seen a marked improvement, with the cost to income ratio reducing to almost 78.57 to almost 64.69% in the first half of this year itself. This in turn is reflecting in the company's improved return ratios. Now moving on, the company's prospects look quite bright. The company is well capitalized to sort of capitalize on the rapid growth in the renewable energy sector. The loan growth is also much faster as compared to some of its peers like PFC and REC, and this growth trajectory is expected to continue ahead given the company's plans for diversification and expansion. Moreover, the company is also very relatively fairly valued. In fact, the FY24 price to book for the company is around 1 times as compared to PFC and REC, which stand at around 1.2 times. So definitely the stock, the IPO is looking quite attractive from a valuation perspective, and the IPO has actually received an overwhelming response on day one itself. It has been fully subscribed 1.38 times till 2:24 p.m. today. So as of now, the IPO looks fully subscribed.
1.38 times till the time of around 2:30 today. The QIB portion was subscribed 1.2 times, the NII 1.5x, and the RII portion also 1.4x. So seeing quite a bit of interest on this one. Not just that, as we talked about, a lot of IPOs lined up, right from a Flare Pen to a oil company, plus a Tata Tech, of course, the big one to watch out for, and Fed Bank Financial as well. So all this to watch out for. But specifically on these power and infrastructure financiers, Rahul, what's your take? PFC, REC had seen this sudden re-rating of sorts this year, and given the kind of subscription figures we have seen for this one, looks like the space is likely to continue the momentum.
Yes, I think I agree with you. I think way the momentum we've seen in this power financing companies, PFC and REC, I think after a long time, I think we've seen the stocks trading at back to the good valuation. So I think still, I think this sector will continue to remain in momentum, and we've seen the guidance also post numbers from both management of REC and PFC. So I think looks quite interesting. This will continue to grow, and I think reasonably valued still at this time, at this price. So I think again at 20-25% decent returns can be made from here in both REC and PFC, and still if we look at it, under-owned by the investors vis-a-vis other banks and all. So I think both will continue to do well. Looks like that could be a re-rating, and plus a healthy dividend payout also. I think if we look at REC's and PFC's payout policy of 30% distributing that PAT, so I think that will remain healthy. So my sense is I think both REC, PFC could be a good bet from here onwards as well. And I think the new IPO as well, I think which is reasonably priced at one-time book, and as you rightly saw that I think a lot of subscriptions we've seen on the first day, I think, and I think it should list at a decent premium from the IPO price.
Could expect a decent premium from the IPO price, and this is just the beginning this week, right, Anisha? So many of these names that are coming in, and every day a lot more updates on that front. But Naresh, let's just talk about SJVN. We're seeing very high volumes in this one today as well. On the charts, SJVN, what is the indication for that? How is that looking like? And obviously today, look at the gains that we've seen, also 7% uptick as of now.
So the stock for the last, say, 2 weeks was in a very tight range, roughly, say, somewhere closer to 75 on the downside and 78, 79 on the upside. Today, we've given a breakout about those levels and getting close to the previous all-time highs of 83 odd. So the momentum is strong. The risk reward is a little not great given that the stock has moved up from 35 odd levels. So out here, one could actually be looking at a strict stop loss below 76 and expect a move towards 90 in the short term. So SJVN looks interesting. Similarly, the whole power basket, the smaller names like NHPC and CSC are also seeing momentum. Even a micro cap name like BGR Energy has come up. So the whole space has been buzzing. One can look at NHPC and CSC as a relatively better bets.
Sure. Kunal, what about the auto sector? A lot of big movers this year. TVS Motors, of course, in the last 1 to 2 months has also done very well for itself. What's your view going forward? Which is the top stock apart from Tata Motors, if I had to ask you? Which is the top bet?
So Tata Motors, of course, is one of them. And
Tata Motors has always been your favorite. I think I've
Tata
heard,
Motors, Indus, these are your top bets that he can say pretty much in his sleep also, and he'll be like, yeah, these are the
so
stocks.
I think the other stocks which have actually popped up is Hero MotoCorp. I think that's a chart which is now at 33, 80, 90 levels. The last I had seen for Hero MotoCorp. I think that's something which looks very attractive. I think the last 1 week of price up move for Hero MotoCorp has managed to break the shackles as such for the stock, because it was an underperforming name. There were many false starts for the stock price, but then it never used to get converted into a breakout, neither into a rally. What also excites about the charts for Hero MotoCorp is the sudden pickup of news flow for the stock as well as volumes, and I think that's the more important feature which we are looking out for. I think that could probably be one of the triggers as well as the stock to watch out for. From the larger cap, traditional large cap four-wheeler names, Maruti I think at 10,400, 500 levels where it's trading also looks very attractive. The stock apparently from that, the break of the 10,000 mark has not managed to succumb under the selling pressure as well as break below those levels, and it's still maintaining the support of 10,000 mark. So keeping that as a say closing base support for Maruti would be bullish on the stock as well.
Okay, Hero Moto, Maruti, but today we also managed to, at the India Electric Vehicle Conclave, Tata Motors Passenger Vehicle MD actually managed to speak about the EV penetration in the country. Where does he see it going forward? Let's go cross and listen in.
We have already seen a very exponential growth in the last especially 2 to 3 years, on the back of very relevant products, very practical products in the market, which was not the case earlier after the launch of Nexon EV and then a mass market product like Tiago EV. The growth has been immense. If you just see in the first 6 months of this financial year, the growth rates are 107%. I believe that in the next 5 years, the country has the potential of hitting about 25% of penetration. As far as we are concerned, we are targeting that we should reach that level in the next few years. With the launch of 10 products that we have planned for, we aim to be, say, by 2030, about 50% of our portfolio being delivered through electric vehicles.
In March 22, we announced a local manufacturing plant for batteries with about 7,300 crores investment at cell level localization. And of course, at some point of time, we'll be getting into motor manufacturing also. And with this, our first EV will be launched in the next financial year, 24-25. It will be a high-spec SUV designed from scratch as an EV. It won't be an IC engine converted to a car, converted to an EV car. So at the moment, it's a premium SUV. So it is in the upper segment, and we think we will get volumes here. Also, what we are doing is we will have export plans for this car. So we've thought about both the domestic market and export markets because we need these volumes to put up our local battery plant.
The Bank Nifty is holding on with a gain of 100 points, and the broader markets too are a bit muted. On the losing side, it's BPCL down 1%, LTI Mindtree is coming under pressure, down about 0.7%. Larsen & Toubro is trading with a bit of a red tinge. NTPC, SBI, these are some of the other names which are actually in the red. On the gaining side, however, it's metals all the way. So Adani Enterprises, Hindalco, JSW Steel, these are the stocks which form part of the metals basket, and all of them are actually holding up in the green. What else is happening in the market? Well, of course, a lot of IPOs lined up, and that's something we'll discuss with our guests as well. First up, let me welcome on board Sudeep Bandyopadhyay to talk to us about the market. Sudeep, let's discuss Tata Tech, right? The IPO will open on November 22nd after a hiatus of almost 18 to 19 years that we have seen from the Tata stable. The IPO price the price band has been decided at 475 to 500 rupees, and despite that, the implied valuation turns out to be around 20,000 odd crore rupees, if I remember it right. Even if you look at valuations, Tata Tech's valuations are around 25 to 30 times forward earnings, and that compares with an L&T Tech, which is upwards of 35 times, KPIT Tech, which is trading at 60 times forward earnings, and Tata Elxsi too, which is close to 65-70 times. Tata Tech, what's your view, Sudeep?
Well, I'm extremely positive, Anisha. I think this is, as you rightly said, coming from the Tata stable after a gap of about 20 years. And forget this history. Look at what the company is focused on. Company is focused on the two of the most exciting trends at this stage. One is transition from internal combustion to electric. That's as far as the automotive part is concerned, and also going forward, self-driving cars. This transition, they are very much a part of pretty much all the major automobile companies, and that's one area which everybody is talking about. This is the biggest thing which is happening in the automobile sector. So obviously they are going to benefit out of this transition, and they are already working with companies like, of course, Tata Motors, Vinplast, which is one of the largest Vietnamese EV manufacturers. Tesla, they have a tie-up with, and so on and so forth. Apart from this, the other segment which they are focusing and now on is aerospace. Now we know this is another industry which is booming, and there is talk of space travel and private space travel and whatnot. Under the circumstances, this is one other area where there will be significant demands going forward, and Tata Technology is involved in that segment as well. So both the segments, dominant segments where Tata Technology is involved, is supposed to be and is actually exploding at this stage. So obviously Tata Technology will benefit of credible management, fantastic track record, and a great parentage, of course, does benefit. And you already talked about the valuation. The valuation at which it is coming is also very reasonable if you compare with any of the reasonably alike peer.
Also some of the other stocks that are buzzing today is refractory stocks that have been buzzing, whether you look at an IFGL Refractors, Vesuvius India, RHI Magnesita. Why are they buzzing in state? What is the news flow? Why the rally? Sharad is here to decode all those details. Sharad?
In focus, we are having Reliance India, and what we are hearing from the dealers is smart money buying is happening in the HNI segment for this counter. If you look at the volumes also, it's coming at almost 20 times its 20-day average, and importantly, the stock has risen its most in the last 10 months. The key DIs already invested in the stock include the names of SBI Mutual Fund and Nippon India Mutual Fund. We did a couple of channel checks as well, and agrochemical stocks are in focus as smart money is moving into these stocks. The risk-reward ratio remains favorable, and the channel checks suggest that the excess inventory issues have been sorted. It's expected that the H1 FY25 numbers will be strong going ahead as well.
Sure, point taken. We did speak with the management of RHI Magnesita. They were talking about how demand is at a 15-year low, but the company has managed to improve their capacity utilization. Naresh, just tell me on the charts, in terms of any of these names, is there any buying opportunity?
So RHI Magnesita looks a stock which has been sideways for quite some time. But if it can start sustaining above 730, that would be interesting. Being sideways for almost now 6 to 8 months, available at the same prices where it was in 2022. So on radar, but if it needs to have some more price action beyond 730 to get excited.
Okay, need some price action. But Kunal, you have any view on any of these names? Do you like any of these names coming in, whether an IFGL, Refractors, Vesuvius, anything that you would like from this one?
No, so I think RHI Magnesita is something which I think looks attractive from the lot which you mentioned, Vesuvius, etc. Are the ones which I don't track. But I think RHI Magnesita has come back above the 200-day moving average. I think the last 3 or 6 months, the stock had gone through a corrective phase from 800 odd levels towards a point when the stock was almost at 500, 550 mark. Even in the last 1 month or so, the stock was has recovered from 610, 600 odd levels to now 660 or 700 plus mark. So that's something which is very interesting for the stock price, and looks to be that the stock is now heading towards or inching towards a breakout. That's a stock which I would recommend, possibly even at current levels.
Okay, point taken. In fact, let's go back to Sharad to get the chatter from the dealing room, because it looks like Reliance India is in focus on account of some fresh HNI buying that we have seen. Sharad, tell us about that one as well. Okay, I think we'll try and get Sharad on board to talk to us about the dealing room chatter, because Reliance India is one stock that was of course seeing quite a bit of HNI buying. It's risen the most it has in the 10 months gone by, and the volumes are also quite impressive at 20-day the moving average. The key DIRs which are already there in the stock include names like SBI Mutual Fund, Nippon India Mutual Fund. So these names are already there. Plus, we are seeing some sort of buying traction come by. And even if you look at the channel checks, there's excessive inventory which was there in the system. That's getting abated now. We have seen strong performance from some of the domestic players, and the risk-reward ratio as per analysts now look favorable, and Reliance India is in focus on account of that. Naresh, comment on the chart check of this one.
So Reliance India has been one of the worst performers in the basket. And the stock has gone nowhere for the last 8 to 10 years now. The stock used to be this 200, 220. Back in 2014, it used to be 150, 160, even in 2010, 11. So the stock has gone nowhere. The only trigger which has come in the last few months has been the fact that promoters have increased stake from one of the investors. The stock has been sideways for pretty long. Today, we've seen the first price action. But overall, seems like the stock is consolidating for an eventual breakout going forward. And the whole agrochemical basket as such has been in a downtrend. In that sense, the stock has been sideways for the first time. Otherwise, the stock generally tends to be much more worse than the sector. So watching it out, once it starts sustaining about 240, that would be an indication as a longer term trend change. It could be a preemptive buy here and accumulate at 210 to 230 levels with a longer term view.
So that's a view coming in on Reliance India. But the other headline that we are just getting is from CAIT talking about how the entire wedding market is likely to pick up, and that's the reason they are expecting good amount of momentum as far as some of these sales are concerned. In fact, the wedding season ahead, they're talking about 38 lakh marriages happening in India in the next few months, and that is likely to bring in 4.74 lakh crore worth of revenue churn in the market. So that's the headline that we are getting. Of course, Titan today is in focus as well. That's crossed the market capitalization of 3 lakh crore. So that stock continues to be in focus. And if you look at the momentum that we have seen in Kalyan Jewellers as well, that stock has been trending higher as well. And we'll pull up all of those charts for you. But in the meantime, let me take this question to you, Sudeep. The entire retailing space, the premiumization wave, Vedant Fashions of the world, they're all doing quite well given the kind of uptick we are seeing in this discretionary spend.
Yeah, absolutely right. I think, and this marriage season, you should also add probably Raymond to this. They have also launched an ethnic range to compete with Vedant Fashions. So I think this space is exploding really, and we are extremely bullish on Kalyan Jewellers as well. Titan of course goes without saying, but Kalyan is also doing a lot of things right. Their expansion is happening rapidly, and we have to remember that they're expanding in northern market and eastern market where the margins are much higher. They are also using a less capital intensive model for expansion, which is partner based. And the same model is being replicated in West Asia as well. So overall, we expect margins and return on equity to improve significantly for Kalyan. So definitely for a medium to long term, Kalyan can be looked at. As far as the other names you mentioned, we like Raymond's. And a lot of noise going around in Raymond for multiple reasons, but the fact remains that the core business post exit from consumer items, which is really FMCG kind of items, I think is the business looks strong and can be picked up for a long term at current level as well.
Come to you also. Titan obviously trading at all-time highs, at crossing the 3 lakh crore market cap as well. What is your view on Titan or a Kalyan? Which one would you pick right now, or would it be both in your list?
So both of them are different stocks. Titan is more stable, of course, a large cap name, a Nifty 50 stock. And I think in that aspect, it's something which we would probably like to trade more often, because the stock has this periodic tendency of going into a correction. Last month or so, for example, Titan had come back towards 3,100, 3,070, 80 mark after a corrective wave, and from there it start to show signs of recovery. In fact, in this last 2-3 months of price rally and then a correction, it's come out of a major consolidation, which is almost like a 300 to 250 to 80 point consolidation for Titan. So what we are looking out for is from the 3300 mark, we could be looking out for maybe 200 to 50 points on the upside. That's around 3550 mark as a potential target range for Titan. Kalyan Jewellers, on the other hand, has been an exponentially moving stock. So it's a high beta name, tends to get into those odd phases of very sharp correction every time the stock gets into an overbought territory. So I would probably be of the belief that we'll wait out for a correction for Kalyan Jewellers, and in case if it corrects back towards say another 10% to 15% lower from current levels, that could be a good starting point.
Sure enough. Sudeep, what's your view on the metals basket? Would you call these moves transitory, or is there some money to be made here?
Well, I'll be extremely careful, Anisha. I think, there's some excitement building up because China is making the right noises, and expectations are that metals demand will pick up once again in China on the back of supportive government policies. But I think we have seen this, movie too many times. Let us see things actually happening on ground in China, real pickup in metal demand, and only then I think I will venture into this. One has to remember when dealing with metals is that this is an extremely volatile, space, and if you are buying into these stocks, you have to be ready for volatility. This is not for the faint-hearted, and more and more we get integrated with the global world, more and more volatility seeps into our metal stocks as well. As far as the entire pack is concerned, if I have to pick one stock, I think I'll go with Tata Steel. Fundamentally, a lot of right things are happening. The challenge in UK, I think, is to a great extent thing of the past. The loss they have booked in last quarter, I think, takes care of the entire, the challenge or problems they had. The support of UK government should, and the change of the production agreed method of production will ensure profitability comes back to the UK operations. Indian operations, of course, are very efficient and profitable always, and the margin is improving. So if I have to buy one metal stock for long term, I'll buy Tata Steel.
So that's a take coming in. But Sudeep, if I had to give you a blank check right now, which stock would you prefer to buy? Give me one name.
If you give me a blank check, I think I'll go and buy Reliance Industries. I think there is some research report also which came out today or yesterday, which tries to explain why there is investors are not looking at Reliance Industries at this stage. But the fact remains, I think there is a tremendous value unlocking, and there's exponential growth potential in this particular counter. It has moved up a little bit post that report today, but I think we are seeing the trailer. The retail is one giant sitting inside Reliance Industries. So is the green energy business, alternate energy business, and a similar thing I can say about the entire telecom space. So there are these three new pieces. Why new? These are reasonably well established, both retail and telecom. Green energy is definitely new. The traditional business, where also things are improving and looking up. So I think it deserves a much better valuation. So I'll definitely go and buy Reliance Industries if I'm given a blank check.
Given a blank check, Reliance Industries. Anisha, I think if you give me a blank check, I would take all the holidays possible, keep encashing that much amount.
Then we'll buy Thomas Cook and the other companies, Easma,
you can do that. Yeah, you can think about that. But I know what I'm going to do if you give me a blank check. Huh? But the centre has written to the state chief secretaries to get all vehicles on road insured, and over 54% of the vehicles on Indian roads are uninsured. ET Now's Anurag Shah is here, joining in with us to give us more details on this. Anurag?
So it's a very big development for non-life insurance companies. DFS secretary has written to chief secretaries of all the states, and it has been instructed that the chief secretary should ask the state transport department to have a comply of uninsured vehicles, because as presently there are around 16 crore vehicles running on roads are uninsured, which is around 54% of overall vehicles of the country. So chief secretaries have to ensure that all the uninsured vehicles get insured, and for that it has been allowed that the National Informatics Center has the data of all the uninsured vehicle on pan-India basis. That data is available with National Informatics Center. So State Transport Department has to take that data, and the State Transport Department will be sending notices to the owners of uninsured vehicle. So in a way, two major developments will happen. On the other side, more number of uninsured vehicle will come under the gambit of insurance. Because the third-party motor insurance is mandatory as per the Motor Vehicle Act. Each and every vehicle running on the road has to have mandatory third-party motor insurance. So GST revenue will also, government will get GST revenue also, because on motor insurance there is a 18% GST. On the other side, for uninsured vehicle, if the penalty is there, 2,000 rupees penalty is there for uninsured vehicle, so government can get a revenue from uninsured vehicle also. So major development for non-life insurance sector, where there is a mandate from Government of India to get uninsured vehicle under the gambit of insurance.
And Anurag, thank you so much for that. Since you've talked about this story, we have seen a momentum build up for all of these non-life insurers, whether it's a GIC, whether it's a New India Assurance, they have all perked up because you're talking about a huge market that opens up. Only 54% of the vehicles are insured at the moment. So of course, there's huge potential for growth as far as this is concerned if all the motor vehicles in the country are to get insured. So both GIC as well as New India Assurance, both the stocks are actually trending higher. Separately, the other space that's doing well is the cables name. So RR Cable is up around 9%. KEI Industries too is holding up with a gain of around 8%. Kunal, your view on these stocks? RR Cable, I understand you will have limited history, but at least KEI Industries and the other broader market cable names?
Yeah, so I think even with the limited history for RR Cable, I think it's a very good buying pattern because, the stock has been moving on the back of some extremely strong volumes. There was such a similar volume cluster on the higher side for RR Cable just about, I think, a couple of weeks back when it moved from 1400 levels, 1420, 1425 to 1650 odd mark in a matter of, I think, 3 odd trading sessions. So I think it's trying to develop a nature of moving on the back of higher volumes in a matter of 3-4 trading sessions and then going for a bit of a consolidation which lasts for at least a couple of weeks for the stock. KEI also, on the other hand, the stock has been looking quite strong from a longer term perspective. I think quarter on quarter as well as on a year on year basis, I think the stock has done exceptionally well for itself. So it doesn't come as a surprise that both these stocks are making new highs, specifically KEI Industries.
Sudeep, what's your view? Is this a better way to play the entire real estate theme through the building materials, through consumer durables, cable companies?
Definitely, building material is a segment which is in big demand, and there has been explosive growth in pretty much all the other segments. Whether you look at the cables, pipes, cement, plywood, sanitary ware, I think all these are definitely worth looking at. The only thing you have to do is figure out the right valuation at which you want to enter, and look at the the growth path which is still left. I would tend to think that it's safer to play through either cement or cables. Both are looking good. As far as cement is concerned, we like Ultratech Cement, the industry leader, and some of the smaller cement companies which are in central and northern part of India, where there has been possibility of price hikes and a little bit of a demand supply gap, where the supplier, which is the cement manufacturers, benefit. So some of these smaller companies as well as Ultratech. As far as the pipes, wares, and this segment, we like Welspun Corp. I think this is one company which has moved up in the recent past, but not as much as other companies in similar businesses. And the way the market is explosively growing, both as far as construction, Nal Se Jal scheme of Government of India, and Har Ghar Jal. So all these schemes does help the pipe manufacturing companies, and this is one of our favorite picks in the industry.
Right. Naresh, let's come to you. What is your BTST trade for today?
So continue to like Bharti Airtel, which has given a breakout and followed up into new all-time high. Stop loss at 967, target price of 990. Second is a buy on Ashok Leyland, which has seen good volumes in the last 1 hour. Stop loss at 175, target price of 182.
Right. And Kunal, your BTST trades?
So I'll go with IEX as the first stock as a buy. Classical breakout today and a stronger degree of momentum finally after quite some time. So would look out for 155 as a target, stop loss 134. And the second would be New India Assurance after such a kind of a strong up move, and of course in the back of news flow looks very attractive. Would look out for targets of 180 and stop loss at 155.
Sudeep, what's your view on Honasa Consumer if you track this one? And let's put Nykaa in the same basket. Have you been tracking these two companies? Any recommendation here?
I will be a little careful, Anisha, on Honasa, predominantly on the fact that the valuation at which it got listed and where it is trading. I think there is a lot being expected out of a new brand, and a lot is being expected out of other brands other than Mamaearth to deliver, to arrive and sustain at that kind of valuation. So I'll be a little careful as far as Honasa Consumer is concerned. As far as Nykaa is concerned, I believe that there is a rationale for this to break out now. All the other new age companies which got listed around the same time, we have seen massive price up move in the recent past, whereas Nykaa has by and large stagnated. As far as the business is concerned, I think a lot of positive developments are there in Nykaa, and I definitely believe that at some stage Nykaa will break out. Now, whether that will come very soon or within 2-3 months, it's very difficult to predict. But by and large, fundamentally, I believe Nykaa deserves a better valuation, and I will definitely go for Nykaa as opposed to Honasa Consumer.
Just on Honasa, on that note, Sudeep, we let you go. Appreciate you making time and speaking with us. Let's take the last word from our technical experts as well before we let them go. Naresh, at the index level, any trade, Bank Nifty or Nifty?
So continue to maintain a hold on Nifty. Can even be a buy at current levels with a strict stop loss below 19,720.
Coming in. What about you, Kunal? You have to give us your index trade as well before we let you go.
So I was bullish in the morning. I was bullish yesterday on the index, and I'll still be bullish on the index even after this tepid 100-point move on the Bank Nifty.
We're calling 100 points tepid. Okay, Bank Nifty, yes, still it's a bit tepid. At least for Nifty, 100 points is a good number to watch out for. But continue to stay bullish despite the kind of underperformance we have seen from the banking index. Because if you look at the trade today and how we are wrapping up for the session, the Bank Nifty has managed to gain almost 140 points, but it's a bit more tempered versus the rest of the market, just a 0.25% thereabouts as far as the Bank Nifty is concerned. The other sectoral indices that have actually managed to hold on better is metal. That's up 1.25%, and the constituents of Nifty metal which are actually perking up include names like Adani Enterprises, Welspun Corp is actually high by 3%, Hindalco, JSW Steel, Tata Steel. They have tempered a bit from the highest point of the trading session, but still going home with good gains. Pharma too was doing all right for itself. Aurobindo Pharma ended with a gain of 3%. Alkem, Gland, Lupin, these were some of your other gainers. Zee Entertainment also deserves a mention because it managed to end the day with around 4% gains. You also have real estate stocks which continue to hold higher. So Oberoi Realty, on account of that foray into Gurugram, plus the luxury project that they've announced in Thane, was higher by 4%. Brigade, Godrej Properties continue to trend at all-time high levels. Talk about all-time high levels, that was visible on Titan today. Quite a bit of momentum on that one, apart from Kalyan Jewellers. That continues to trend higher. So Titan managed to cross that 3 lakh crore market cap level and did well. The other hospital names also actually are at record high. So Fortis, for instance, was higher by 4%. Narayana Healthcare was up around 3%. So some of these names also doing well for themselves. Bajaj Auto was the other one that we are watching out for, sitting at decent amount of gains. But let's talk about losers as well. Not a great day for KPIT Tech at all. A cut of 7% after Kotak is asking the reason of the exuberance that we have seen on the stock and calling it a bit expensive. BSE also saw some profit booking, down about 5%. Thermax down in the trading session. Mankind Pharma, Max Health. These were the stocks that were seeing a bit of a selling pressure. And overall, at the index level as well, if you look at the mid cap and the small cap index, we started off with the advance decline ratio, which was fully in favor of advances. By the end of the trading session, it's pretty much narrowed down, and the small cap index actually goes home with a bit of a red pinch. That's full of the mid cap index as well, because it was just toying around the flat line. Yes, just with a gain of around 0.07%. So pretty much a day that belonged to the bulls, but it was consolidation. That was the name of the game. Could not hold on to 19,800, but ending with a gain of almost 90 points. That's how we are wrapping up this edition of Closing Trades. From the entire team who put this show together, thank you so much for being with us.